All right, what up, y'all? Welcome back to the Investment League. Thank you for tuning in. If you're new to the channel, I'm using this account right here to demonstrate how to grow a small account, how to build financial wealth, and how to use the stock market to help you pay for debt, pay for bills, and reach financial freedom. So before we begin, make sure you guys like the channel, like the video, subscribe to the channel, and make sure that bell is hit so you can stay tuned on all the account updates and how I'm using this account to grow my own financial wealth and my own financial freedom. So before we begin, none of this is financial advice. None of this is recommendation. Like I said, this is just me documenting my own progress. So getting right into it, I'm currently down $6.42 on my Tesla position, but that's just $100 that I put in for January. So in a couple weeks, when I deposit my $200 for February, if Tesla stays at this price or goes lower, I'm going to be able to get Tesla for a cheaper price so that when it comes back up, I'm actually going to be able to make money. So the whole reason why you want to continue adding funds and buying when things are cheaper is so that when they do come back to their normal price, you can make money instead of waiting until it comes back to that price. So just think of it as when you go to the store and you see a TV that you want and it's $1,000, let's say, and you don't want to pay $1,000 for that TV, so you wait till, let's say, Black Friday, or you wait for a sale for that TV to come down to like $800, and then you're willing to buy the TV at that price. So that's essentially what you're doing in the stock market. When things drop in price, it's nothing to panic about. It's actually something to be excited about because it lets you get into stocks and pay for stocks at a cheaper price than they normally are. So always think of when stocks drop as an opportunity to buy. So we're down $6.36 on Tesla. ARK, we're up 8 cents. So this ARK ETF actually has Tesla in it. So that goes to show the value of investing in an ETF. Even though the stock Tesla is going down, the other stocks that are within the ARK ETF are keeping this up. And it actually finished up 8 cents today. So just because Tesla is in the ETF and is down doesn't mean that the ETF is down. So that's one of the benefits of investing in an ETF versus just investing in only singular stocks or individual stocks. So those are those two plays. I got into this Riot play yesterday. So I did demonstrate, or I did talk about this. I mean, I didn't get it. I got into it last week, but I did talk about this in my previous video. And basically what I'm doing with this is a credit spread. So what I'm doing is agreeing to buy the shares at $30, and then I'm agreeing to sell the shares at $29. So the difference between 30 and 29 is 1. Contracts all control 100 shares, so you have to multiply everything by 100, so that would be $100. I bought 2 contracts, so I had to use $200 to open up this position, and I got paid $62 for it. So because I sold the expensive contract and bought the cheaper one, the difference in these two prices was 31 cents or $31. Because I got 2, I got paid $62. So that gave me a 30% return on my investment when this is all said and done. And this expires at the end of March, or the beginning of March, March 5th. So I have time on this, so I'm going to let this sit. Once it reaches about 80% probably, that's when I'm going to close it and just collect my profit, not get too greedy. But things are going really well on this one. A new play that I did today was on Microvision. So the reason why I'm in Microvision is because they deal with solar beam technology, and there's talks with them pairing with Apple to make a product, supposedly. So that's one of the reasons why the price is going up, on top of just technology. All tech stocks have been going up. So this actually, if I look at it on this chart right here, you can see that it's gone up ever since the beginning of February. So the last 16 months, or the last 16 days, it's been basically on a tear. It went from about $5 all the way to $23. So I'm looking for a short-term either consolidation or continue to run up. If it does fall, basically what I did was I sold a put. So instead of doing a spread, I just sold. So instead of buying one and selling one, all I did was sell an option. And this expires in 3 days. And basically, I'm agreeing to buy the shares at $19 a share by the end of this week. And because I'm agreeing to do that, I actually got paid $60 for it. And what I had to do was agree to buy the shares at $19 a share. So I had to put $1,900 in collateral just in case that happens. So it's basically just on hold. So at the end of the week, if Microvision stays above 19, then I won't have to buy the shares and I'll keep my $60 for free. If it does fall below 19, then I'll get them on sale because right now they're worth $21.45, but I'll get them at $19. So I'll get them up for a little bit cheaper and I'll still get to keep that $60. So this is almost like double dipping when it comes to selling options. So if you're in the stock market and you don't have options yet, you have to apply for it. So you want to go to account, and I believe it's right here, and you want to go to settings, and once you go to settings, you want to go to options trading. And then when you go to options trading, it'll say whether you have options on or not, and then you can apply here. And level 3 is when you can get spreads. So normally what happens when you apply for options, they'll get you to level 2 where you can buy and sell options. You can sell cash secured puts or covered calls, but you can't do spreads yet because they want to know that you know what you're doing. So you'll have to do a couple of one of those, but every time you do one, basically you can reapply. There's no limit on how many times you can apply for spreads. And then once you get approved for spreads, then you can do credit spreads and debit spreads, such as what I did with Riot. So that's where we're at. This $121.98 in cash is the combination of the $60 that I got paid from Riot and the $60 that I got paid from Microvision. So this is all my profits so far. So I used the whole $2,100 that I'm using for options. I'm using it currently, so all my money is going to work. And at the end of this week, I should get this $1,900 back, or I will own 100 shares and then I can do the opposite, which is selling my shares. So instead of agreeing to buy the shares, now I'm agreeing to sell the shares. And I'll show you guys how that works if I get assigned here. If not, we'll just continue this method until that happens. But this buying power right here is going to be our indication of how we're doing as far as option spreads go. I am in Bitcoin. I'm up $116 currently. If I do end up selling any Bitcoin, I'm just going to withdraw all that money. So what I'm waiting to do is for Bitcoin to reach $250 in equity, and then I'm going to sell $50 of that equity. And basically what I'm trying to do is lower my cost basis to the point where I don't have any more of my money in Bitcoin. So it's all profits. So I'm gradually and slowly taking money out of here. So once this reaches 250, I'm going to sell $50 worth of Bitcoin and withdraw that and put that into my bank account and use that to pay off my debt. And then what I'm also doing is all the money that I make every single month, I'm taking $200 and depositing it in here for my long-term plays. And then I'm going to be withdrawing a certain percentage of the profits that I make each month. So we'll be able to keep track of all three of these things at the same time without having to do any extra research or extra work just to figure out what money is what. So if you guys have any questions on any of this, please leave a comment down below. Make sure you guys like the video, subscribe to the channel, and I'll see y'all on the next video. Peace.